Well, Mike Simonson, the chief economist for Compass, just released the 2026 housing market forecast. I think this is a fascinating forecast. I'm going to talk about it here in a second, but it's not necessarily what he even forecasted, but it's something he said very subtly that I think makes all the difference in how we should think about 2026.
We actually look at 2026 as sort of the start of a next era of the housing market. So in the last 4 years, sales have been at really deep freeze levels and prices kept pushing relentlessly higher. So affordability gets worse. In the next era, that story flips. So sales are starting to move higher, but prices capped or maybe down.
I don't know if you caught that, but he was essentially saying transaction volume is going to be higher where things are more affordable. Now, he stopped short of saying that prices will just outright fall. But the truth is that where we're seeing prices fall is where we're seeing the transactions. Now, that is one theme that I think we're going to see in 2026. The other thing to think about is, where is the median buyer buying? Where is that person buying? Because if they choose to buy in a different neighborhood, it doesn't matter if they spend the same amount of money. I'm going to show you an absolutely mind-blowing transaction that happened in maybe some other areas where we're seeing major repricing even as the median stays flat. So in this video, we're going to look at Mike's forecast, and then I'm going to give you some housing market stats in Nashville to help you understand the nuance. But let's take a look at Mike Simonson's forecast. He is forecasting flat, but notice that he also created a range. We don't know if there's going to be 50-year mortgages next year. We don't know, but if there was, it's going to impact the housing market. We don't know what the Fed policy or what the U.S. government policy will be under Trump for next year. We were told he was going to declare a housing emergency. He hasn't done that yet. There are all kinds of things that impact the housing market in ways that we have no control over and no ability to predict. This is why it's so important to look at the things you can control and look at the data points that do have an impact on what you're thinking about. Now, the high range, 4.6%, the low range, negative 3.6%. He's acknowledging prices could drop up to 4% next year. Pretty wild. But let's take a look at Nashville. One of the things I wanted to show you is that the median contract price per foot went negative in November. Now, the reason I use contracted, because that is going to tell you where prices will be in the future. And we can see it was negative for the past 6 weeks and just bounced. Now it's flat with 2024, which is flat with 2023. We are ending the year basically where we have been for the past 3 years when it comes to contract price per foot. When we look at median price, it's very similar. We can see that we dropped and we went negative in December. We've been negative now for about 2 weeks. And believe it or not, we'll probably be negative exiting the year when it's a price per foot basis. Now, the reality is that even if it's flat, what you're not seeing is all of the price discovery happening underneath the surface. That's absolutely mind-blowing. I'm going to show you a transaction here in a second. Let me show you another place. Charlotte Park actually reminds me of what Mike Simonson was talking about. Prices have softened. We've got the return to office push, and now you're starting to see it move. Charlotte Park, I'm helping a buyer here. Look at this. Okay, he's getting a townhouse. You could see these were going for well above 300 a foot, 350 a foot. Now they're going well below 300 a foot. My buyer is buying one for well below 300. I'm not going to tell you what it is because it's not closed, but he's also assuming a mortgage, a 3% mortgage. He is crushing it, in my opinion. He certainly didn't pay top dollar, and now he's getting a 3% mortgage. And Charlotte Park, you can see, has double the transaction or contracts that they had a year ago. We're starting to see some of these places closer to downtown pick up on contracts. I think it is RTO, return to office. I think people are more interested in buying. Of course, it's December, so all transactions are very low. But one of the things that's more important than anything, more important than where median price is where is the median buyer buying? Where's that person buying? Because if they choose to buy in a different neighborhood, it doesn't matter if they spend the same amount of money. You're going to see prices change where the areas that they go to and where the areas that they leave. And right now, I think that buyer is wanting to be closer to downtown. They're having to go into the office more often. We'll see. It's not an established trend yet, but it certainly indicative of what would look like. Let's look at this. 1231 Floyd Hudgens. This was my buyer in Ashland City. They bought this for $636,000. It was for a property that had been on the market almost 90 days. I think they had, let's see how long they tried to sell it for all year long, and they finally just gave up. They tried to list it for $875, and now they sold it for $636. They bought it in June of 24 for $810,000. 18 months ago, they bought it for $810. My buyer got it for $636. That is massive repricing. Now let's take a look at some KPIs here for Nashville. Active listings up 8,100. Last year they were at 6,900. This is almost 1,200 more active listings. We're going to go into the new year probably at about like 7,300, 7,500, somewhere in there. And then it'll move up in the spring. We'll see if we get the growth. It's going to be so interesting to see. Do we get active listing growth next year? Is it double digits? So remember, we're getting 18% active listing growth on sales volume that's basically flat, slightly up. It's not up 17%, I'll tell you that. Contract volume is negative right now. So that is just as much about sellers holding onto their price as it is about buyers potentially stepping out. Is it unaffordable? Is it uncomfortable? Is it an economic issue? That's a question I have. Nashville median sales price is $500,000, right where it was last year. When we look at price cuts, people have cut their price and not been as successful in selling it this year as last year, which I think is interesting. We look at price bands. We can see that the active listings are up across the board. Active listings are up across the board. Contract volume is down pretty much across the board. We did see a shift into the lower price points when mortgage rates dropped, but now they've kind of stabilized and been moving back up for the past 4 weeks. And contract volume is down a little bit, slightly, not a ton. If you are thinking about buying come the spring, think about traffic. Go to Google Maps and actually put in your address and where you're planning to go every day at this time you were planning to go there. You will be able to map it and see how bad the traffic is. I think that's going to be extremely important. Keep in mind, there's 30,000 people moving to Greater Nashville every single year. That's got to be like 15 or 20,000 additional cars every single year. Being closer to where you work is going to matter more this year because offices are demanding you come back into the office more often this year than they did last year. It's starting to matter. Davidson County's been soft for 3 years. I think this is the year where Davidson County becomes more popular. If I had to look at the data right now and say where the trends I think are suggesting, I do think Davidson County will be more popular in the coming year. The most important takeaway, in my opinion, is that the median price is really unhelpful for the nuance of the average buyer. Sure, home prices in general may be the same, but we're seeing dynamic shifts across neighborhoods that matter way more than whether or not the same number of people are spending the same amount of money on the same number of houses. That doesn't tell you where they're purchasing or what type they're purchasing or how they're purchasing and financing it, what they're doing with their money. There's a lot of behavior changes happening in this next year that I think are way more important than whether or not the median sales price goes up 1.5% or even down. Keep an eye on the local data. And with that, I hope you all have a great rest of the day. Thanks for watching. I look forward to seeing you next Saturday.